Good morning, good morning, good morning. Hope everyone is well. Let me just check everything is working. It doesn't sound like my headset is working. Actually is. It sounds a bit odd in my ear, but it looks like it's working okay. So I hope you're all well. Hope you've had a good weekend. It's an early one here, Monday morning for me. Normally we do a late one, normally on Monday. But there's not a lot of data today. So I was going to focus on the opening trades of the session, of the European session. So here you can see we had this huge sell-off on Friday following the historic, really, non-farm payroll data. Big miss for the headline. The headline wasn't that big of a miss. It was the previous 3 months when they were all revised lower. So we had that big move down into close here on the stock markets, and the dollar rallied very significantly on the data. There's the 2 o'clock candle from Friday, and then we move lower again into the closes on Friday, right into this 6,200 level. Here's the 6,200 level here on the S&P. This is almost tested for the first time in a long time, and we went into 6,225, 6,230 was breached as well on Friday. Since then, futures have ticked up a wee bit. Markets in Asia are positive. The Nikkei is at 40,300, so similar, obviously a very similar pattern in the stock market at the moment. So under 40,000 for the first time in a long time. If we just go up to the daily chart here for the Nikkei, and not many of you trade the Nikkei, but we had that big leap up at the end of July. We'd been trending higher since the historic move lower on Liberation Day here at the beginning of April. Stocks had recovered, back over 40,000. Couldn't hold it on the first break. Big leg up here on the 23rd, held it into the end of the month, and then on Friday, big shake out back under 40,000. So for the Nikkei in this highly daily high level daily time trend of 40,000 level is not only psychological but quite a significant support level. Sorry, my brain's not functioning this morning. I'm normally very good in the morning, but early morning, but perhaps there's a lack of coffee at the moment. But anyway, I'm going to do. I've done this over the weekend on a few of these charts, and we'll look at those later. We'll do them all together as well. But we put a fib level on the sort of from the extension, right from the extended intraday low to the high that we got towards the end of July. You can see some very strong rally. The key fib level doesn't come in at 38.2, so all the way down here at 37,600 here on the Nikkei. So still relatively well bid here on the daily time frame. So key bounce today has taken us back to the 20-day moving average here on the Nikkei. And remember, this is open at the moment. If we look at the futures on the S&P, similar sort of movement, except we are still quite shy of the 20-day moving average. So as we start the week, certainly in the cash session in the US, I'll be looking for this move back over the 20-day moving average. If the stocks are going to shake off the shock of Friday, the non-farm payroll data, and the sort of the consensus that the market is cracking now. Even though I've talked about the weakening and the of the jobs market, which is really sort of what the Fed wanted to confirm any chance of cutting rates, and also obviously the weakening and of the inflation. Inflation, as we measure it, is still a bit sticky. 2.8 for the PCE, but the jobs market, with that the revisions of the previous month and the 3-month average coming down quite significantly, is actually probably not nailed on, but made a rate cut in July much more likely. We're about 80%. If you look at the Fed Watch tool, the free tool everyone you can use, here for the 17th of September meeting, we now have a near 80% chance of a 25 basis point cut. This is where we are now, 425 to 450. 25 basis point cut now, more or less 80%. As you can see, sorry, where am I? Actually, that's come down a wee bit from Friday. Anyway, that's dollar's cooled a wee bit. But as you can see, a week ago it was only like 60% chance of this happening, and a month ago it was about 64%. Now it went down quite significantly actually from this data between these two numbers here. Yeah, there we are. So it's 35. That's right, 35% chance of it staying unchanged a week ago. Now it's only a 20% chance. So that looks nailed on. Certainly, well, if September isn't nailed on, if we clip forward to October, the end of October as well, so we get an extra week or so. So they're not meeting till the end of the October session. We're now at a 95% chance. This is where we are now. 5% chance it will still be here. So there's a 60% chance now of a half a percentage point, a 0.5 of 1% cut by the end of October in the US. So that's lifted spirits a wee bit this morning in early trades in Asia, and certainly seeing here in the futures, the stock markets here in the future markets, in the futures markets, the derivative market here in on our platform here, you can see has also ticked up a bit like all the others. So there's that 20-hour moving average, which is our first target, which is where we stalled so far today. So we've been long, or waiting to go long potentially. There's the first cross, the 5 and the 9 here on the hourly chart, having been short nicely. Lots of points on Friday, waiting for a break of the 20. But as you can see, into the European Open in the next half an hour, we are still capped by the 20-day. So patience, hang on to that. As I say, the Nikkei has already breached its 20-hour moving average here. So that would have triggered long there at 5 o'clock. Dipped a tad last hour in the initial hour, but we're still up. Target, the ATR here on the, oh, sorry, it's RSI, I thought it was the ATR. On the, just insert, on the hourly ATR for, which is the average true range, how the likelihood, the average travel distance of the Nikkei is 160 points. So 160 points from here, at least 160. We're at so 350, 360 is what we're looking for. I don't, at least another half on that. So we have moved up already quite a tad. So 40, 60, 40, 400 could be an upside target today for the Nikkei as we continue to move. But obviously, you don't want it to be got it long here. This is where we are now at 40,293. So that'll be an hourly positive move for the Nikkei. So yeah, stocks, I say, stocks in Asia are a wee bit better. Buying the dip, possibly. It's too early to tell. Obviously, the start of the new week. It's quite a quiet week this week compared to the deluge we had last week. We got well over half of all US companies have reported, and it's still around that 85% of beat expectations. Some big beats, particularly for Meta last week. That was a real standout last week for me. We've got Pfizer tomorrow, AMD, AMEG, Caterpillar, the big engineering company, the bellwether of the S&P, the Dow, the US 30, and again you see the US 30 is performing a wee bit better than the S&P. We've got to our 20-day, 20-hour moving average, and the Nasdaq it's a bit like the S&P, still yet to breach the 20-hour moving average from Friday's shakeout. Cross here in Europe, the DAX with markets opening about half an hour. Let's have a quick look at the data we came in to have a look at, which is the Swiss inflation that's come out. Again, a rejection of the 20-hour initially here. So let's see what it looks like on open. We'll have a look at trading out in the shorter time frames. I like trading DAX into open. So basically, we'd have been long this morning. Let me go back to the different layout for the DAX. This is what I like to use. Not is it pivot point one? Pivot point one here. So this is my 5-minute chart for today on the DAX. So we'd been long into our VWAP. Interesting, we rejected VWAP, rejected VWAP, rejected VWAP. So waiting for the short. That would have gone short again then. So we'd been long for most of the session this morning. Short here. We've breached that late Asian market low, 23,548. So we're going down currently. So we're still short into the 30 minutes ahead of the open. Let's just have a quick look at the Swiss inflation. Well, that looks like, so it's coming flat. It's better than expected. So sorry, it's ticked up, I should say. It's not better than expected. It's more sticky than expected. As you can see, these are sort of not negligible, but virtually negligible. Well, they aren't. It is negligible. Negative de-inflation, disinflation, if you like, in Switzerland. Most central banks are aiming for that mantra of 2%, and we've got flat prices, declining prices for the month of July on a monthly basis. So they were a bit hotter than expected, actually twice what was expected. So that's, although it's a really low numbers, you can see it's still quite a positive. It's quite a significant surprise to the upside. So a quick look at the Swiss franc. And remember, the Swiss franc has been the best performing of the major currencies against the US dollar this year. Certainly on that strategy, there we go. Dollar ticking up quite significantly on there. So there's a nice, very classic sort of break of the VWAP here at 620. So you're doing long. Props got out there if you're a bit twitchy about the green turning to red for trading these Heikin-Ashi candles. Well, that's a very positive candle there at 620. Another one at 627. Sorry, 725. Although again, depends. But if you'd had your stop loss at the down at the VWAP, it would have taken you out on that data. But it's the overall trend, which is what the Heikin-Ashi tells you quite significantly. Lots of volatility down that 5-minute time frame. Again, another great example of, you know, be careful trading the news releases. I know a lot of you get a bit upset with the standard account. You've got to pay extra to trade the news, but look what's happened here. See here on the 2-minute time frame. Actually, let's go right down to the 1-minute time frame. Again, there's not a lot of data around today, so this will be one of the main movers. So there's been some big dollar players here. So we were long into the data, and that was your. So you could have got. Again, this is a good example. Let me just put this on. Sorry, let's put this as an example of. That's the window. So there's our 4-minute window where with your standard account here at theproptrade.com, you're not allowed to open a new position. So it's kept you out, hasn't it? So if you'd been long here and you'd closed it ahead of the news, ahead of the major volatility for this particular asset, you'd already accrued really nicely. We'd been down here at 80.59. And we've come up here, you'd have got out at 80.72. So you got 10, 12 pips in the bag if you take the spread into account. Ahead of the news. Wait for the news to come out and then potentially fade it. What do I mean by fade it? We'll go against the initial reaction. Remember, this is on literally the minute chart. So what's happened since the news has come out? Well, the move up for the dollar against the Swiss franc has been maintained, basically, hasn't it? We had a big step down. We went all the way down here to 80.52. You can see the spike on the data, the surprise strength of the inflation. It was most monthly and the annualized one was better than expected. So the dollar's been coming back against the Swiss franc today from the recover from its sort of today. So it's been like angling up, not in a clear way, but obviously this is the Asian session, but for Swiss and dollar traders, none of them, main components are not around. The volumes are a bit lower, the liquidity is a bit lower during the Asian session. It is Monday morning as well. The European guys have been in about an hour, so we're still lifting this. So the sort of here, this is the data at 7:30. Here we are now at 8 minutes later. First 5-minute candle we've completed, and the 10-minute candle is in process. So we're still edged to the upside. So the bias is still to the upside, but we're stuck. We can't get above our high of the day, which is stuck at another round number at .8070 745 is our upside resistance at the moment. So there we go. We just got the 746. So the trend remains in place despite the data. Okay, that's what I'm trying to say. So don't get too uptight or too obsessed about trading the news, because the initial reaction here on this minute chart would have been a very strong negative candle in the first minute. So this would have taken certainly closed out your longs here. You would have where you'd got filled on this, depends how you'd set it up, if you're trading, how close your stop loss was, but certainly you would have given up some of the gains you'd seen ahead of the news, only to now look to perhaps move it higher. Again, it might be markets manipulating it as we move above the high of the day following the data, but with the dollar certainly has come back here. Yeah, it's up to the higher time frame. Come back again today since the this is the end of Friday's big decline for the dollar. Dollar's come back here against the Swiss franc, and here on the hourly candle, which is obviously still got 20 minutes to complete, you can see it's quite a significant candle. Currently not as big as the 2 o'clock candle, but the 7 o'clock candle is looking quite positive, and we're above the VWAP has provided a bit of support, so we're stretching away from that at the moment. So obviously this is only start to plot today. If we go to a different layout, go to our standard daily layout for the Kiwi here on the hour, you can see, sorry, the Swissy. That's where we've ran to, and why was I talking about 75? It's because that's where the hourly 20-hour moving average was. We talked about that on Friday when the dollar collapsed and gave up a lot of its gains. So a close on where we're a little bit higher than we are ideally would be triggering a long position on the hourly time frame on this particular setup. We go down to the 15-minute and the 30-minute, it would have already triggered long here. So the 30-minute went long at 6:30, and the 15-minute trader here for the Swissy would have gone long at also at 6:30 as it's crossed the 20 moving average from a flat rounding. That's quite nice and positive, and nicely in the pips there, the 15-minute time frame. But again, if you kept it open for the for the data, you would have been taken out. The stop loss would have I'm assuming you'd had your stop loss sort of down here initially, and you would have moved it up here somewhere around about here, but that would have taken you out. So the low volatility, the low liquidity at this early time on a Monday morning, or lowish, I should say, not low. London's coming into swing now, so we are actually, it's got to wait, isn't it? So no, that's the volatility. The liquidity has picked up significantly, but the data, the news would have stopped you out there if with that wick moving down. So again, dangers of trading the news or having positions active at the news. So just a case in point for them, and that really is the main data of the day. Obviously, the week ahead, we got plenty going on. This is actually our calendar here says there's a bank holiday in the UK. There is a bank holiday in Scotland today. But the rest of the UK, England and Wales and Northern Ireland are all still It's a normal working day elsewhere, but that's sort of, it's not the United Kingdom's got the holiday. Scotland's got the individual holiday today. So that's, so you see that's the one of the so right, you can see it's Monday. It's relatively quiet. So if just filter it out, we'll look at the rest of the week on the main events. We just select all. We just look at the 2 and 3 bull events. You can see it's a much quieter week than last week. Not insignificant, but it is August. Markets tend to volumes tend to lower. Ranges certainly for the forex tend to be within forex volatility in August tends to be quite range bound because some of the big bosses tend to be away of the desks on holiday. Major managers tend to be away. You know, people take holidays, so it tends to be a bit range bound, and volumes tend to be a little bit lower. Liquidity can be a bit tighter. So the issue that then becomes is, you know, some mistakes can be made. So you can get some quite strange volatility in August, which tends to get ironed out in September, in the September-October timeframe. But anyway, it tends to be not a. It can be a pivot point. Again, you see some turns in the August timeframe, but let's see what this August brings, August 2025. So as far as this week's concerned, I say it's a bit quieter, or much quieter than last week. We have got a ramp of earnings still to come through. Some big companies reporting this week as well. Factory orders later on today out of the US. Tuesday sees the monthly dear me, the monthly PMIs start to kick in. So we're starting in Asia, Europe, and then the US, the service, the non-manufacturing, ISM non-manufacturing, which is basically the services one, and the global, the S&P services and composite data as well on Tuesday. So Tuesday it kicks off the PMI monthly run, and that'll run throughout the week. Wednesday's a bit quieter. We got weekly crude inventories, German factory orders early on Wednesday. Thursday is busier. We have the Bank of England, some trade data out of China. That'll be interesting reading early in the morning. UK expected to cut rates by 25 basis points. A big, again, another split central bank committee that's been split more than the Fed has. That was a big surprise, and how much politics was wound into that for the Fed meeting last time is questionable. I'd say there's fairly quite a big dollop of that in there. So, but again, there's the dissenters in the Bank of England has been much longer running. So see what that vote looks like again. There may be some more consistency and convergence on Wednesday's meeting. Thursday's meets. Thursday, isn't it, the Bank of England? Weekly claims as well out on Thursday. Obviously, Bailey will have something to say about what they've decided after initially, and then later on in the day. Bostic's got a speech as well out of a key dove in the Fed. Later on Wednesday. Friday, the end of the week, Friday the 8th, sees the Canadian jobs data, probably the highlight of the day, as it didn't come out last Friday. And Mr. Pill, the chief economist of the Bank of England, has got something to say on Friday morning. So as you can see, a much quieter week as far as the economic data is concerned, or the scheduled economic data. The earnings numbers are still quite significant. We had Warren, sorry, I've forgotten. Brain's not really functioning very well this morning. Warren Buffett's Berkshire Hathaway reported quite a significant decline, particularly it was in Kraft Heinz investment, 4% decline for the first time in a long time for Berkshire Hathaway over the weekend. They always announce he does his letter to investors. It's always on a Saturday, they react on a Monday. Their shares, both the A and B Berkshire Hathaway shares, will react to that on open later on Monday today. So let's have a quick look to see where we are as we run into 10 minutes before the open. So the Swiss CPI has held on to the the dollar's held on. The Swissies continue to weaken post the inflation data. So the dollar's still up. So you'd still be bid on that one. Let's look at the others that are live. Aussie, obviously the market's live here in Australia. Again, a similar pattern to the Aussie coming back. There's been a bit of a mixed bag with the dollar. So the Aussie's up against the dollar. So coming back from Friday's dip down here to 64.25 zone post non-farm payroll data. So the Aussie's back here in early trade. So you'd like to see it moving ahead of Friday's highs if we're going to go any higher from here. So 64.95 was the top here on Friday. An initial reaction to non-farm payrolls, and we're currently trading at 64.82, so another 10 pips to the upside. But that's still here for hourly traders. That's still bid. Seems to be flattening out, and we haven't for the last 1, 2, 3, 4, 6 hours. We can't get above 64.80, so that's our key resistance today. I would guess we're interested to see what that looks like on our. Where's the yeah, so here and it's still above the VWAP, so we went above it, so it's still positive here. I can actually candle set up, so it's again still bid, but you can see that resistance at the 64.80 level for the Australian dollar. Let's just leave these on now. So CAD 137.70 this morning again. So dollar moving lower this time against the CAD. So the CAD's up, the Aussie's up. So commodity currencies are doing better, but Canadian dollar not quite as good as the Australian dollar so far. Obviously, the Canadians are still fast asleep, but the trend remains to the downside. For this is going to reverse back up. Dollar's going to gain. 137.94 is where the 20-hour, and then obviously 138 itself. So CAD still positive, but not as positive as the Australian dollar so far because there's not many Canadian bankers trading at the moment. So Aussie leading the way. Let's have a look at the Kiwi as we've just looked at the Aussie, and that is live. So again, struggling to get above, I'll get to Friday's highs, but certainly bid. Not quite as bid as the Aussie or but probably in par with the Canadian dollar so far in those early trades. Here in Europe, Euro 115.75. So that's again similar sort of pattern. We're opened quite positively and put to new highs, and Euro still holding well above its 20-hour moving average, following the UHAR bounce from 114 on non-farm payroll, the weakening of the dollar. So Euro opening trades stuck here at 115.75. What the line is there? What is that line? That solid purple line. What's that doing in there? And why is it there? It's interesting for a reason, but some fib levels as well. 50 fib level of this decline is the next upside target, and that's where we stalled on Friday. We ran into that, so that's our next upside target. So it's struggling with that so far this morning. So 115.88 is your target. You see there. There's that decline from the top here as we got just shy of 118. So watch that today as well. We haven't actually tested it yet, really. So watch that as the European markets open in the next 10 minutes or so. So Euro 115.80 and a big whole point plus, or nearly 2 whole points better than the the leverage the dollar had late last week. So can we break 116 this week? That's or even today. Sterling 132.89, so having to go at 133 again, lifted a bit like the euro here, so resistance 133 as we go forward, and again there's that well, that was an extent, that was different fib level. Take that one off now. Let's remove that fib level. There we are. That's that one. So you know, we could put one on there though, couldn't we? On that leg there. So that to that, and there again. There's the next key fib level. It's 38 here on the for sterling, 132.89. So we're still quite a lift away from that. So sorry, 130. What we're talking about? It's 133.10. Where did I get 133 from? Maybe not the moment. So too significant or significant zone for sterling to get back over if it's going to start to recoup again. If this resistance holds the 133 and the 133.10 where the fib level is of this big decline of euro, the dollar could be back in shakes. But to do that, we'd need to turn shorter. We'd need to break below 132.60 going forward today, and certainly 132.30 where the 50-hour moving average is today, and there's probably not enough data kicking around to do that for sterling today. Let's have a look. So crypto had quite a big shakeout on Friday as well. I went to the key 112 level here on Friday as we went down, and this morning we tested it again. And we've been talking about this for a long time. That well, we caught that short on the daily time frame, haven't we? We've been down. We'd identified. Let's take this back up to the daily time frame with this potential divergence we were talking about last week, weren't we? Yeah, remember we got this the decline, quite a significant decline in the RSI, a decline in the MACD was coming down, but there wasn't a particular sell-off in the price action, so we were wary of that. And then we had this 4-day decline into the 20-day moving average here on Thursday. It looked like it was going to hold Thursday, but then Friday saw that big shakeout, and we went shorter again on Saturday. We bounced a wee bit on Friday, yesterday on Saturday as we went into the 50. So it's a very easy. If you were short here from the 20 to the 50, that was an easy few points there on Bitcoin. The suggestion was already in play. So obviously now the question is how strong this 112 level is going to prove. It was sort of a line in the sand as we were going up. So what we could see is the 20 coming down to cross the 50, so it would be more negative, or the 50, we turn back up, we break back over the 20-day moving average, and we go back through 120 and then to all-time highs to the upside. So that's still possible, but at the moment the momentum is to the downside, as you can see with the MACD here and the histograms from the MACD, although Sunday's move up has sort of negated that a bit. So from the bright red we've gone to bright pink, so the difference is being reduced. Obviously that's weekend trading, guys, so remember, take that with a quite a significant pinch of salt. So if we had the Monday to the weekday trading, the significant Friday decline is what you would be looking to take away. So we do need to break the 20-day moving average and get back sort of to last week's levels at around about that 117 plus level, really, to get back into that range for Bitcoin. Obviously that'll be done in the space of a few minutes for Bitcoin, so obviously be careful. But the trend is so far down, it's under the 20-day moving average, and we've been in to test the 50. 50 has provided support as it did here at the end of June, beginning of July as well, so similar pattern there. So Bitcoin still bid, but under the 20-day moving average, so watch it carefully. Energies, oil back to $70, UK oil, US oil $68, so it's in the top of the range again. The range we'd identified here. So the breakout last week, so we've come back. The break to $71, we've come back into the range, but we're still at the sort of top end of the range, and we're still being supported by the 50-day moving average. So that's Friday's big shock move lower, but then it's a classic sort of pattern, candle pattern here. So pivot up is up here, so we're down. So we're looking for the 50-day moving average to hold. If not, we'll break this $67 handle and then move down. Possibly test the bottom of the range, but certainly test that level at 65.85. But at the moment, we've bounced off the 50-day moving average on the oil market technically. Indexes we'd had a look at. We'll come back to the Dow in a minute. To DAX to have a look at the open, but everyone's favorite gold 3362 at the moment on our derivatives charts. And I say I can't get too excited about gold at the moment. We're really just sliding sideways. Looked like we could be going lower on Wednesday. We bought back Thursday, and we had our big lift on the weaker dollar on Friday. So far this morning, actually, we're down for the day. Looking at that, let's look at the hourly chart. That's the lift, and it's sort of from the weaker dollar, and it's again, it's a bit like those forex charts. Not a lot of action going on, but 3376 is the target to the upside. We're trading at 3362 at the moment, and supported at 3344 to the downside. So that bid is still in place from the shock of non-farm payroll, but again stalling like lots of other charts, waiting for some more data this week. But as you can see, we stalled at this level here, and that's our next target level to the upside, 3376, which was a previous fib level, as well as around 38 of that leg. That leg is more or less has been extended, hasn't it? So if we put that, that was the low. That's certainly in now. Oh, there we go. That's very interesting, isn't it? As if by magic, Fibonacci makes you smile again. So, whoops. Well, there we go. There we are. From the top to the bottom. We've had shorter waves inside, but there we go. You see the key. What is that one? Is that the? It's not telling me. That's a 50 fib level we've breached, and we've stalled and tested the 61.8 fib level of this decline. So hence, as if it did it on purpose, didn't it, on in Friday's close. So not only is 3376.50 an upside target, but it's beyond, and it's a 61.8 fib level of the previous leg. The current 61.8 is at 3370, so that's the big upside target. So breach 3370 is a target upside for gold traders today, with support, interestingly, at the 50 fib of the this current down leg from July the 23rd, here at 3350. So it's an interesting one for gold today. So that's still bid to the upside, and then the 21 EMA is coming up to the 50 fib level at this hugely psychological 3350 level. It's still $3 short of that at 3347. Excuse me. At the moment, as you can see, we've gone still in the overbought area on our RSI here, and the MACD is catching up, crossing and moving lower. So this might be our high is in, and we might be coming down to test this 20-hour moving average here at 3350. But at the moment, we're still $11 above that, so we're relatively bid on the gold market. Also, let's just quickly have a jump across at the DAX and see what's going on the opening trades on there. Let's come down to the 5-minute time. Where would I be? Would have been that's our high. This is what I'd do if I'm going to be trading this. Let's just put in RA. That's our pre-market high here on the DAX. Our low of the session, obviously the new week started, is down here at 23,396, so under 23,400. Our high sits at 23,610, so 23,600 is an upside target on this particular setup. So it's sort of been long initially. It's run out of puff here at 5 o'clock this morning, 5 o'clock my time at 3,596 or 3,600 is is proving resistance so far into the open. So it's had a nice run. Here's the 7 o'clock candle, 7 o'clock hour, when many European traders have a look at this, are up and trading. So there it's rejected the high, so they've been short and moved up from the European low, if you like, pre-market, which is 23,484. I'm going to put that in for now. For the cash market opens, it'll probably take that out. Mind you, it's Monday. There's not a lot to move it other than the so that's the tighter sort of pre-market for the European range. And as you can see, although we're that's the 8 o'clock candle now, cash markets are open and we haven't had any volatility to start the week, really. So that's still biased to the short side. Well, it's at the moment here on these 5-minute time frame. So there's the 50 period moving average, 23,565. The pre-market high at 23,600. So at this first opening flurry get going, so where we're going, but a break here, a break of this level here, 23,480, and I'd be looking for 23,360. A break above, certainly got to get obviously get over the 20 to get over the 50. We need to break above 23,562 here for any action to take out the pre-market high at 23,65. So at the moment, I wouldn't be doing anything on that particular setup, on the crossing moving average setup, because it's still under the 20 and still biased to the downside. So we may be looking to take shorts, but given that we've been up for the day, it's too early to tell. If we look at a different layout, we look at our pivot point layout with our Heiken Ashi candles and the VWAP. If we put the again, put the 5-minute time frame on. So again, you can't see the beginning of the. It's the beginning of the. Just put this on. There's the where's 1st of August, 3rd of August. That's the beginning of the similar pattern. You see the floor there at 23,396. There's that high we were talking about. So we've been long earlier, then short, then long, and this is short. Bit of volatility at 8 o'clock. Putting the 8 o'clock candle. It's 8 o'clock. Clock's here. There's the volatility there. It's a negative one, so it's bounced up. So again, similar scenario. There's the high, pre-market high, 23. There, they've closed the candles 23,596. Our European low was here, 23,480 here, and the pre-market low in Asia took us down to 23,396. So there are 3 areas you'd want to be looking for. We had an initial, let me just move that candle. We had an initial volatile session on the open. So that's, again, if you want to bring these levels in higher. So it's sort of still biased a bit to the upside. And this current candle here, just 7 minutes in, is green. So we've gone from a nice trend down here with the red candles red candle trend there, no wicks to the north, so we're short, no wicks to the south here on the green candle, so we were long. Relatively strong negative candle, question mark there, but strong move down, strong move up. And what you were waiting for is a candle that plots with zero, with no wick to either the south or the north. At the moment, it looks like it could be to the upside. So you could have had a tentative entry here after the initial flurry of negativity on from this red, from this green turning to red. So you might want to be looking to go long here around where we are now, 23 50 area. You can see the spread here is quite wide here on the Heikin-Ashi candles. Sorry, the Heikin-Ashi candles plotting, not like normal candles, but good for trending. So you might have taken a tentative long in these first 10 minutes of German trading, but lots of orders placed, and see how the candle completes really to decide whether you want to do. But I say it's not a strong entry, but you see how the excuse me, see how the spread has narrowed literally to our eyes there as the trades start to tick through, and the first flurry of German trades range. So it's still biased to the upside. This second 5-minute candle for the start of the week is looking relatively positive. So a gentle, having been long, short, another bit of a long there into open, or whether you'd want to do that or not. So obviously I waited for the open flurry to get away. Potentially to the long side, and that's why the spread has widened again to the upside. So it's looking relatively positive. Let's all do a similar thing with the UK FTSE. You know where the levels were there, did we? Was the FTSE started here. So again, our high for the pre-market high at 5 o'clock, and then again at 7 o'clock, interestingly. So that's definitely upside resistance, 9,115. Do you want to mark that on as we start the week? 9,115. And interestingly, the FTSE is at lows of the session, so this is biased to the downside. So this again, it's inverse to the it's good to see that the two different setup. So this would have definitely been a short here, out when this went to green. See how the open goes, and then short on this candle. So I'd be short. I'd be certainly be short this. Why hasn't this got the VWAP on it? VWAP wasn't signed. I'd be short this on open. The FTSE as we've plotted to new lows of the session, but as you can see, that's 9,085 level, which is there we are, is quite a support area here on this 5-minute time frame. So I'd like to see that breached a bit more significantly than it has been. So we're 9,089 at the moment. 9,085 would be my trigger to go short on that one. Maybe some buying at that, but certainly the bias is to the downside, as you can see from the high at 9,115 on that one. So there would be short on that on this short time frame. We again put different layout on. Let's do a different one for the sake of it. MACD and the SAR that remains long. Actually, it's the hourly time frame. That's fine. It's not so yeah. So that's been short. Flipped on there, but we are immediately short again. So this is short. That's been short since then. That MACD cross there. Make that a wee bit. Where's the MACD? Oh, there it is. Make that weird. So that has been, it was long here, and where the MACD have crossed the green, and then we've gone to red. You could have got out. That's then the parabolic size flipped. So this one, this setup here, has been short. This particular strategy has been short from whenever that was. What's that? There we are. That's confirmed. Parabolics are above the MACD crossing here. So that's been short this morning from 9,004. Sorry, 9,104. Again, if you'd pulled your stop loss down too close, might have taken you out. The parabolics are then flipped at that point. So you've been short from here and you've not got out until that's flipped, even though the MACD is still short. Then you've gone short again, right at the bottom here, unfortunately. Oh, hang on a minute. Yeah, that flipped there, didn't it? Yeah, then that's gone short again. So that's re-shorted, if you like, at 9,085, right at the bottom of the day, that area we talked before. So this strategy, the short and made some money. It's gone short and it's out of the money at the moment, having entered right at the bottom at 9,085. This particular strategy, the MACD SAR crossing strategy. Our standard, the EMA cross, the default that we use here, that's here on the 5-minute chart, that went short there at 7:15, and it's still short. But again, depends where you had your stop loss. Stop loss would have initially been up there. You can see the high of the day. If you'd got in here and pulled it and sort of by here at 7:35, you'd pulled your stop loss down to there, you'd have been stopped out on that. But then that's again, like with the MACD one, it's rejected the 20-hour 20 moving average. We've gone short again there at 9,092, and again we've now pushed a new day low of 9,083, 23 below the 9,085. So we're still short from a second entry here, and stop loss probably around about the 20-hour at the moment. That was quite a move down, so maybe we got a bit closer around about there, 9,095. So there we go, trading the open. Say short the FTSE, short the DAX. Sorry, no, we were long the DAX. Well, long the DAX. That's what I was saying. I'm showing the difference. Right, long the DAX and short the FTSE. So the DAX has ran to its 50-hour moving average. That's the opening 5 minutes. So there's that positivity we saw on the other chart. Let's go back to the one we were using, which is our pivot point one. So there's that long. There's long position. So we're in the money on that one to the upside. Upside target, as we said. Don't get too greedy, but that looks like quite a key resistance, 23,595 so far today. So another 30 points potentially to the upside on the DAX. If this keeps going, obviously wait for a red candle, but that's a strong candle that's forming here. See how the wick got smaller on this one. The body of the candle got bigger. Here, that's positive, and now we've got no downside wick at the moment, so that's more positive as well. So could easily see that pre-market high at 23,595 taken out on the DAX. Positive, relatively soon. So there we are. That's what I'd be doing if I was scalping this market as we speak. So any questions, anybody, for today? Doesn't look like it. So take care, everyone. I've been here nearly an hour. So remember, it's a relatively quiet week. Bank of England is probably the most significant thing I'll be looking for. The dollar index is what we are seeing here. If we just go to the hourly time frame, is indexes some buying of the dip, basically. Here you see here on the Dow. It started into close on Friday, but obviously the recovery is much more insignificant than the big decline we saw on Friday. So far, bit dip buying on the Dow, the S&P 500, exactly same pattern here on an intraday base on the hourly chart frame, but looking relatively positive. So futures positive, split in Europe. The DAX was down, and the FTSE is in the green on open, although that hourly chart is down as well, isn't it? So there we go. There you go. The high time frame still to the downside. Excuse me. Dollar. If we look at the euro, 115.65. So struggling for direction, couldn't get to 116, and put my normal layout on. And sideways continues. That's the 5 minute. Look at the hourly chart. So that those fib levels we talked about very much in play for the euro as well. So and finally gold, again won't have had much direction today. 3360 is our next upside level, and then that key fib level there, that's the 61.8 at 3370 or 3369, and the support today above 3350 at 3350.05, where the 50 fib level sits of the decline from the 23rd, 24th of July to the low here on the 30th of July. So range bound gold as well, but interesting one to watch that as well. So take care. Monday, the new week is up and running. May the pips be with you, my friends. I'll see you tomorrow. Be good. If you're not a prop trade client, I always say, why not? Challenge phases or evaluation phases start from a few dollars. The standard is the 2-step. Many of you, I know, like the express 1-step challenge. $5,000 account starts from $55. If you're new to us, I know lots of companies are offering silly prices for these accounts. Well, you know, we will offer you a if you're new, I say new, 25 gets you a literally what it says, a 25% discount for new people, new traders to us, first time accounts. So that's a percentage, remember. So if you haven't got a lot, you know, $40 gets you started. If you've got a few $100s, 25,000 will cost you around about $130. $130 for $25,000 of equity. I think that's a great value. And remember, we got no hidden rules. There's nothing to worry about. We do like our risk management here. It's a mantra of the company. So, you know, you don't want to be trading, risking more than 3% on any particular trade idea. So series of trades on the same idea, but that's just good risk management and good discipline, my friends. So here on the 1-step express account, $25,000, you need to produce a profit target of 12%, daily loss is 4%, and maximum loss in the entirety of the account when you're trading of 7%. You can trade the news here with the express account. That's why a lot of people trade it. You've heard my views on it. Your refund happens on the second time you express a withdrawal. So you'll get your $130 back, possibly within 2 weeks if you're successful in the first week. And 80% of the simulated paper profit that you've made is actually returned to you as real hard cash, whether it's in crypto or in dollars, but 80% is yours. The pro account, remember, gives you a bigger discount, also allows you to trade the news, gives you a 90% refund. Here's a 2-step challenge, 10% and then 5%, maximum 10% loss obviously across the board, and similar for your funded account. And again, you get your funds back. That's $146 for the 2 steps, so a little bit more, but obviously discount's bigger. So give it a go, my friends. A little bit more because you the ability to trade the news. If you don't want to trade the news, standard account and a 25,000 comes in at $130 also. So no news trading with the standard account in the evaluation phase, but when you get to a funded account, you can. Okay, it's only an 80% split. So the choice is yours. I know what I would do. I tend to fade the news, so I don't need to pay to trade the news. But I know a lot of you like to try and catch the ticks and the volatility of that big news announcement. But 25,000, 50,000, that sort of accounts I'd be looking at gives you the equity to play and trade lots of other positions. Remember, we're on Discord as well. That's where all our support is done. That's where all the chat's done. That's where I place my some of the trades that I do personally. So under the trading strategies, I'll post some of my, or most of my, I've been a bit slack last week, end of day trades, so that the ones on the daily candles. I know a lot of you are not interested in that, but that's where I do most of my trading. That's where I make most of my pips and points and hard sterling here in the UK. So we had another good week. We had a good month for July. July closed for me on Friday, and August kicks off tonight. Well, it kicked off on Friday night, but I didn't take any trades. There were no trades on Thursday, I think I remember. I haven't updated this for a while. Sorry, I haven't updated this since Thursday. I'll come back and do this later today. I've been a bit busy elsewhere at the moment. Okay, so take care. I will see you all again tomorrow. Any questions, stick it here on the general chat. I didn't post that, did I? Oh dear me. I was live. It says 8:20. I was actually live at 7:30. Yes, you can. Ultimate. There we go. Katzen, Johnson, and Thompson are our very active support crew. The three amigos, very on the ball, those guys. So any questions you have, like Vishal had, VoltX had, we're here to help you, my friends. So opening multi positions, yes, you can, as Katzen said there for Shushank. Take care, everyone. I'll see you all again tomorrow. Be good, be safe, and let's get those pips and points and get you funded as